All right. Good morning, ladies and gentlemen. Welcome to the show. Welcome to another day in cryptocurrency land where the markets rolled over pretty hard yesterday. Today being a weekend, about a week before Christmas. As of tomorrow, we are not going higher. So we fulfilled our measured move on our head and shoulders, inverted head and shoulders pattern. And now next move apparently is breaking this rising trend line. Yesterday was that break, and it came down in pretty spectacular fashion, pretty much all day long, selling off, ending the day on a really good volume candle. Let's go to lower time frame, see kind of how that worked out volume wise at least. So VA tool started getting a little bit positive here on the 15-minute time frame. Each time frame is going to be a little different with the VA tool, but we're still running under this volume right there. Well, technically we're above it, but this is still controlling us. This seeming support here, see the volume aggregation tool spike up. That's some accumulation. And right now buyers and sellers really aren't doing a heck of a lot into this weekend. So we could just chop around until Monday. And if the stock market's the indication, Monday could be very interesting indeed. So chopping around here, nothing too good though. Since we fulfilled this inverted head and shoulders pattern, pretty much means we're directionless at this point, and so it's hard to really derive any major moves. Obviously, bias is still to the downside, and that's going to kind of rule the roost for the time being. So it is what it is. We're headed lower. We broke trend lines. We got to our measured move. Swing failed high. And now we're headed a little bit lower, and most of that move's already been done here at least. We could come back down and try to retest these 15,000 handles, but that's still a little bit of ways away. We're at 16.7 at the moment. So we got a little bit of chopping around to do, I think. We'll see what the weekend holds. Christmas is always interesting, the Christmas week especially. December 17th, actually, I forgot about that. Today's December 17th. I don't want to call it a crypto holiday because it was kind of like top in 2017, but it kind of feels like a crypto holiday. Usually something happens on December 17th. This year, however, doesn't appear to be a year that something's going to happen. It's pretty benign action that could switch, but it doesn't really look like something is really going to happen today. I doubt we're going to come up with a big pop today. More likely, if anything, a big drop, but that really isn't in the forecast either. Choppiness until we try to swing up likely and fail and then roll over. That's usually the theme in these markets. And here's an example. You try to swing up, then you fail. And it's happened time and time again over the past several months. You got a swing and a fail, a swing and a fail. You go up a little bit and fail, go up a little bit. Finally, it's enough, and then you come all the way back down to the lows. Swing high failure here, swing high failure here, swing high failure here. And it's just rinse and repeat until something changes. But we don't have that change quite yet. The only half intriguing thing is that the whole because FTX going down, in my opinion, was massive. Maybe it wasn't massive money wise. I don't know. Maybe all that money was already spent. But these drops were much more large in terms of the market percentage that they dropped. And then this one, not so much. And in my opinion, this should have been big. Like, I know Luna going down was huge because it took a lot of things with it. Maybe that kind of weakened FTX's situation, which made this less harsh. But still, I mean, even sentiment-wise, I think that going under was worse than Luna going under because you could at least sell Luna. It's kind of hard to get your money out of a failing exchange. I guess saying it out loud like that, maybe one of the things is, hey, what's up, Ahmed? Ethan's good, bud. Ethan's awesome, actually. He's really, I think he's coming into his own. He's doing amazing. Yeah, don't get me bragging about my kid. He's doing really good. Um, but yeah, so maybe FTX going under like that in the fashion that it did meant that nobody could sell crypto. So maybe that's why this was more muted. Doesn't mean that it was, any less worse of an event. But it could mean that, with Luna, the whole market could basically still sell. You had some Luna funds that ended up getting tied up there. But, FTX was open, Binance was open, all these were open, and they were selling Luna and other assets on the open market. But if FTX just shuts its doors and no one can even sell, it's like, it's like a gate of money. It's like, hey, thanks for all this money. And then there's no selling that can be had. So maybe it kind of curtailed the selling pressure a little bit. Maybe that's why it didn't drop as much as it could have. But anyway, the whole point remains of lower lows and lower highs in the market, and it looked decent coming out of here, but once it hit the measured move, it was done. Unfortunately, I got a little bit too bullish. This was the Fed meeting, and I didn't even know there was a Fed meeting going on. I don't keep track of all of them, and I got a little too bullish on that one. Didn't trade anything, but my newsletter was too bullish. And then the last Fed meeting, I mean, it worked like every other Fed meeting. Rally before, then a dump into it. So that was that. But right now we're stuck in the weekend, and the weekend is benign action, but we're not getting any bouncing pressure. We're just going sideways. This is our current trend line. It's a little too aggressive to be, to work on the daily time frame. I don't think this is going to hold us down for the next weeks, but obviously that's not the trend line on the 2-hour. It adjusted. Oh, that's weird. Yeah. Whatever. Anyway, obviously it's not going to do that. It's not going to keep us down at this angle. It's a very, very acute angle. We're not going to do that, but we'll probably go sideways for a bit, and then we'll falter again, is what it looks like. Probably the best case scenario here is we get back down to the 15s, don't go lower, come back up higher, and try to make some kind of a range. I was hoping we were going to pop into here and make some kind of a range up here, and this could be the low, but it doesn't look like that's in the cards yet, so it is what it is. Yeah, so that's it for BTC. Let's take a look at the rest of the market. Next up is Ethereum. And Ethereum was stuck in this flag range, which wasn't too bad. The market was going through some things here. Try to pop up, and then here's the Fed meeting again, taking us all the way down. Look at the volume aggregation tool. Very, very bearish. Look at the buying pressure. It's anemic. There's really not a lot buying happening down here. So this, again, also like Bitcoin, is kind of maybe waiting for lower prices. So, yeah, there you go. Just kind of, this one has some time to move into this trend line. This is also a very aggressive trend line, though. A lot of people calling for 10,000, 12,000 low. Not sure how I feel about the market right now. I'm hodling cash until volatility settles down. Yeah, that's the best strategy, Ahmad. 100%. Ahmed, I'm sorry. That's the best strategy. 100% is hold cash until things settle down. And I'll be honest with you, even if you miss the bottom, which you probably will with that strategy, it's perfectly fine. I would much rather, miss losses. I'd much rather not have losses and not, than take gains, if that makes sense. So once things are looking a little bit better, yeah, then you can jump in. But until then, obviously, staying cash is the thing to do. I know it's boring. I know a lot of people, want to trade. And if you short, I mean, it was a good day yesterday. Cardano got destroyed. And we talked about Cardano and Kava on a previous day's newsletter. And those things had freaking garbage days yesterday, which was good if you were shorting. But, for those people that don't really know how to short, yeah, obviously just stay away from the markets. Stay cash and then wait for better days to come, even if it takes years. There's a guy named Dan Zanger. You can look him up. He's famous for saying that he's like, just stay cash. He's like, that's all you can do. Just stay cash and just wait. That's the best thing to do. So good job there. But yeah, so Ethereum here, taken out its range completely in a couple of days. Higher volume yesterday. It's not blockbuster volume like these candles. It doesn't have to be. It's just, it is what it is. But taking out the range, definitely bearish. Some people may want to call for an inverted head and shoulders out of this. Shoulder, head, maybe a shoulder over here. I guess technically that could work. The way that an inverted head and shoulders are structured, the left shoulder should have the most volume, the head should have the second most volume, and the right shoulder should have the third most volume or the least volume. And so far, that's panning out this way. But there's going to have to be a key reversal back up. And if that is the case, then your neckline is this horizontal. And actually, I think I'll move this alert up because we have it at 1227. Let's do 1346. So that's actually a head and shoulders breakout point. I had the 1071 down here. Yeah, let me adjust that on on the alerts. 1346.89. So yeah, that technically would be your breakout point if you're going to call this an inverted head and shoulders, which, you know, let's go to the 2 hour. I do think it may roughly qualify. I mean, these left shoulder and head are pretty darn close. The low is 1073.53. The low here is 1075. So ever so slightly higher than this low. So I guess technically it's not a head and shoulders pattern, but these volume signatures can be interesting. So, but either way, that is a good resistance level. So it's good horizontal. Maybe we come back down to the 1071 and then we can try back again. And at that point, we would have a fully fledged range going on here in Ethereum, which would not be a bad thing. But still got to go through the motions of that. All right, next up is Hex. And Hex again spiking down towards the 2 cent level and getting supported. It's been supported a number of times down here, but you can see in between we're doing lower highs. So that's really not a good look. It's having a hard time completely breaking this level, but it's probably will. It probably will just completely cascade lower and just continue to go lower. There should be some support around here, though. You can see this large launch up from here. You see this trend line I have, how it kind of hugs the trend line, then escapes it completely until much later. So that should be a contention. That should be supportive, and it has been supportive. The question is how much longer will it be supported? But really no trades here on Hex, I don't think. All right, next up is BNB. This thing kind of gave up its potential leadership. It was looking pretty good for a minute. This one did have an inverted head and shoulders. Tried to break out, couldn't do it, and now is undercutting the right shoulder pretty handily. So volume aggregation tool, very negative here. You see the reds overtaking the greens substantially, and lower highs. We are bouncing right now over the weekend, but volume is low, implying that once that buying pressure erodes, it'll roll right back over again. So if you're looking at shorting something, BNB could be a short. Could put yourself a 2.5 to 3% stop loss on that. No guarantee that this is the high, but this is a small breakdown point, so it's pretty good for a short. Seen better. Maybe give it 5% stop loss if that's something you want to do. BNB has had more volatility step in. It was very stable through this area. Tried to break out, couldn't do it, and then it looks like they're punishing BNB. So, you know, that's not good for the market, I don't think. Overall, not a good signature when BNB starts rolling over, but that could be a potential trade if someone's looking to do a short. Always have a stop loss on. Always make sure that you're protected from major losses. All right, next up is XRP. XRP giving it up yesterday as well. Again, cascading lower pretty much all day. Higher volume. VA tool. The bears have control, but it's not massive control. XRP does appear to be, slowly accumulated. Look at the VA tool on the daily. It's overtly bullish, which is interesting as this thing basically goes nowhere. So price pays. All these secondary indicators are just that, secondary. And you've got XRP here really with not much to do. If you're thinking of shorting it, shorting everything right now is probably the likely direction. As this kind of tries to take out this weird semblance of a triangle. It's really nothing, but you do have two opposing angle lines converging, which technically is kind of a triangle. All right, next up is Doge. And Dogecoin, again, like everything else, cascading lower. Yesterday, getting pretty aggressive at the close. Here's another one where it's rising on lower volume. Aggregation tool here is pretty expanded to the negative. And looks like there's a trend line holding this down as well. Give up a wick right there. We can include that. And so that's kind of your pretty much the weekend, maybe into Monday before this maybe tries to roll over again. If it crosses the trend line, then we're going to, we're finding support down here, which we have done in the past, so that really wouldn't be too surprising. But Doge on the way down, I think would be a good trade. You already see once it had the bull flag and broke down, it really hasn't been very good. All right, Cardano yesterday was one that we discussed. It was breaking into lows first. Anytime something's breaking into lows first, it's worth keeping an eye on. And Cardano has been breaking into lows first for quite some time. So this has been a pretty dedicated short. I'll address your question there in a second. Ahmed, I think you're talking about Doge again. So here you have a descending triangle. broke down, did get choppy, was able to get back up, but putting in another triangle here, and then the rollover. You can see here also a little bit of choppiness on the 2-hour time frame, trying to get back in but unable to do so. Very similar to this action on the daily before rolling over in larger fashion. So we'll likely continue again. Here again, you're pausing, but your buying pressure is already drying up. And you see the VA2 with a very large selling gap here. So Cardano probably will be one of the better shorts percentage-wise. And it usually is good percentage-wise in both directions. But in a bear market like this, especially with Cardano now a live network and no longer just hypothetical, there's no reason to own it. Because anytime in crypto something goes live, it usually starts to fail, vis-a-vis EOS. All right, going back to Doge, Ahmed talking about a double bottom. So it would actually be a triple bottom is what it would be. Not that it's bullish, because you have to keep in mind the major market sentiment at the moment is not bullish. Even if you see a double bottom in a bearish market, you kind of have to avoid it. You could my USB drives keep popping up on me. I'll just remove it. It's fun. But yeah, I mean, you realize you're in a bearish environment overall. And yes, this is a nice bull situation. I completely understand that. But this flag really didn't even try to complete. If you move these out, you could have ended up with a symmetrical triangle if we had a better market. But we don't. This market sucks. So, you're looking for something like that. Because look at the scale of this uptrend. This is actually a pretty nice sized flag for this size of a flagpole. But we just never got it. And then they sold it off very quickly. It sold off only about a week after it finally stabilized up here. Came back down. Actually kind of found resistance at the breakdown point right there. And if you were to trade this, you would trade this likely for a lower high trade. Maybe up into here. Or even up into here. If it got more aggressive, it's going to stall somewhere up in here to the 11 to 12 cent level. So technically this is a double bottom. But it's kind of like saying I've got a really, really cool raft in a typhoon. It's not going to go very far. It's just not, the typhoon's going to overwhelm your really, really cool raft. And that's really what's happening here. So you can take it for a little spin. You can take it for a spin, but it's probably not going to take you to the moon, basically. And you can take that trade you just with that understanding. You know what I'm saying? You have to go with that understanding. And a trend line is just a real simple way. You can see once a trend line broke, you could just, like, say you bought this double bottom. Say you bought it, you sell in the trend line break. That's a 40% trade. And Dogecoin back here was a really volatile asset. So, if you did that, this would have been the one to do it on, actually, because there was a lot of things that didn't move when Doge moved. Like, most of these didn't do much in the top 20, whereas Dogecoin did due to the whole Elon Twitter deal. So, but once that trade was done, I mean, I guess you could have shorted it, but you probably would have been stopped out here. And if you want to try it again, I mean, I guess you could do that. But, take some guts to put on a trade like that. If you really wanted to be aggressive with an entry, if it holds the low, we can go back here and kind of, play that situation if that's something you wanted to do. I don't usually advocate buying double bottoms like this. It's just not my thing. It's cool if it's somebody else's. But so you can see here we have this trend line that comes down. You have a somewhat aggressive volume candle, a little low. Starts crossing the trend line. If you bought it on the trend line, you would have had a decent stop at about 5 or 6%. 5 or 6%. And this one ended up rallying substantially. So this would have been a pretty good trade. One I missed, but 40% gain for a 5 to 6% stop loss. This is a really good risk reward ratio. But even if it popped up to here 15, that'd be a 3 to 1 risk reward ratio. So not too bad if you would have bought that particular double bottom. If you want to do it again over here, I would employ similar measures. Let's get this bigger here. Doge pump violation. I don't think Elon did anything with Doge, and SEC doesn't have any regulation authority over cryptos anyways, so it doesn't matter. But so here you can see here's a similar type of a candle pop up. Maybe it comes back down and retests. If it does hold, you could try to be very aggressive and have a really tight stop loss. But I would do it on the way back up personally, or after it's held. unless you want to try to be that bottom print, you're going to have to. But if you try to be the bottom print, you have to know what your exit strategy is. If it fails, are you going to give it an obligatory 3%, 5%, whatever the case may be? You've got to give it that. And then you just, take your chances. Or you wait for it to shore itself up. I mean, if you're really hawking the chart, you could wait for this retest. And this could be inverted as a small inverted head and shoulders, even though the volume signature is wrong. But the point remains of a higher low after a lower low in terms of reversal. If you wanted to get really specific with it, you could have done it right there, which is a little bit deeper of a stop loss. But that would have been kind of the safer trade on the 2-hour time frame if you're looking for that reversal after holding the low. And that's what you're looking over here with the triple bottom. So triple bottom is similar to a double bottom, but like I said, I think that if you bought it here, your move may be limited to here, which still could be 30% if you don't fall apart completely. But by the time we get down here, are you going to see it? You kind of have to be hawking the chart, just up to how you want to handle that. But that's how you would handle that. And that could be a potential trade if it holds. Not mad at it. All right, next up is Solana. And we got Solana here. Solana is going through motions. Didn't really roll over too bad yesterday. Held the lows. Solana has been very benign, especially considering this whole FTX thing. It just hasn't done anything. I don't know if FTX just locked up and eventually, I don't know. I don't know what happened to all those coins that FTX has of all these other coins. Maybe they'll be sold off at some other point. I don't know who has jurisdiction, to be honest with you, over the whole FTX debacle. But this thing has been stoic in the face of some volatility. Yesterday it gave it up a little bit, as you can see. But look at the volume, very, very minimal, and kind of interesting here. Thanks, Ahmed. Ahmed saying smash the like button. Smash the like button. Appreciate that, bud. Yeah, so that's Solana. Next up is Matic. And Matic over here, Matic is doing a little bit worse, but still holding its very broad range that it's been stuck in. If Matic's going to hold this range, I would view that as extraordinarily bullish. You've got the 72.51 down here on this 72.61 for this trend line. If this gives it up, though, it would run the risk of coming almost all the way back down to the 30-cent level. But Matic has been very, very solid up here, even through all of this volatility, unable to take out that low during the volatility. And look at the buybacks. Look at that volume. That's a whole day of really, really big volume. So, I mean, there is some support here for Matic. Imagine if that candle didn't show up. You know what I mean? It would just, you could just basically add all of this to the bottom here, and something else would have happened this day. It probably would have been worse, so maybe it would have been down here, and then Matic probably, would be down here, looking like everything else. Everything else undercuts, is for the most part, undercut all kinds of semblances of support, where Matic is still holding up. So pretty good action overall in Matic. Not really buyable, but it's good to notice these things. All right, next up is DOT. And you got DOT here really falling apart. This was one yesterday we talked about, could also fall apart. This one has just slowly been falling apart. Hasn't been very volatile. Got a little more volatile yesterday. Look at that closing candle. Very aggressive, very high volume. You did get a little bit of buying pressure here with this wick, but I can imagine it's dramatic. Let's look at the 5-minute chart. So that's a pretty full big boy sell candle. And then you got a buy candle here. And let's go to the 1 minute even. We should be able to look at this without too much problems. Look at the VA tool right here. Look at this. Just really overt selling pressure. Even on the bounce, it couldn't put together, it really couldn't put together much buying pressure to deal with this mountain of selling. It only got to about half of what the selling pressure was. And now we're just kind of floundering around. So DOT definitely probably another one worth looking at shorting if you're thinking about shorting. All these networks, Cardano looks like garbage. Solana looks like garbage, but for some reason isn't being sold off. Could be an FTX related thing. And then DOT, look at the bounce, unable to really get up at all, and the volume's already falling away, as we've discussed already with some other ones. So it is, yeah, it's just chilling around and moving lower day by day. All right, next up is Tron. And Tron just choppy all over the place. Really not a directional situation. Obviously, the trend is bearish, but we've been stable since about a month ago in this uptrend in a bearish uptrend. So it'll fail at some point. This could be the ultimate high. So we could have already started the downtrend lower. So if it gets up here towards my trend line here at the 55573 and does another swing failure, that could be a good shorting opportunity. Shiba swap. Shiba swap lower, rolling over, just lower. Shiba swap is a bad fork of Dogecoin, and it's just really not doing anything substantive, at least. Another good potential short candidate is it really has no intrinsic value at all. All right, Avax. There we go. Avax rolling over, going and fighting with its lows, unable to stay up. It was getting pretty stable, but rolling over hard yesterday. Days like yesterday, they show you what a coin really is made of, and most of them not really made of much. It shows you Cardano is just really wants to run lower. Shows you DOT wants to run lower. Stuff like that. Bitcoin dominance prediction. I don't really play that game, to be honest with you, Loopy. It's really pointless. As more alts come in, dominance goes down, just by dilution. So it's kind of hard to predict. We can look at it, though, and just kind of see technically where it looks like it may want to head. Yeah, I know I'm no fun. Never have been. I am zero fun. I make my wife laugh, though, so I guess that's all that counts. So that could be a little bit of a supportive trend line if you're thinking of shorting an AVAX, but I don't know. I think AVAX is a good network. Fundamentally, I think its three-chain solution is innovative. I really do like AVAX as a technology. I think it's got some use, but if the right people don't sponsor it, it's just going to be kind of useless. Yeah, I was just saying that, Ahmed. Yeah, I was just saying that. I think it's I think it does have a ton of potential. I think fundamentally it's different from a lot of other coins in the way its network works. I think one day it'll find its place. But it kind of came on with Solana, and Solana really got popped up with 100,000 transactions per second, which is amazing. But then it started having issues, and with the whole FTX thing, sponsorship of Solana, we'll see what happens with it. But I think this will find its place. I do like it, but it's just hard to buy down at these levels. There's no sponsorship. I mean, if you look at all the volume down here, this is right where we actually should be finding support. Now that I'm looking at this, you look at this volume stepped in right here, and we're not getting support. So that's right where that volume stepped in. This is when Avax announced they were doing like a $2 billion community development fund or some shit like that. And that's when all this volume started labeling in or coming in to it. But we're not finding support. So from a technical perspective, not really very good. Other than that, this would be your support at about the 9.5 level. If we just chop and chilling around the 9.5 level, if you like AVAX and want to take some type of a longer position, I'm not really mad at that as long as we don't undercut that too much. Undercutting this would put this whole verticality into jeopardy, and that's going to put us down to 2.5 from 9.5. So not a good thing right there. What up, Brian? So much of Sol's run-up was on the back of lies, two devs inflating their TVL by 7%, lying about TPS claims, counting consensus messages as transmit. And oh, really? Oh, I didn't know that, Brian. So what's their actual number then if it's not 100,000? I never heard about that. So is it only like 5,000 or something? Nobody knows? Wow. Because I think AVAX is around 30,000, if I'm not mistaken, if they have it inflated numbers. I mean, and 30,000 is pretty darn good. It's what? It's TPS, right? Transactions per second. 30. And what? Visa only does, so many transactions per second. So it's like in the hundreds, if I'm not mistaken. They run like half the damn global money around the world. Hold on. 60,000? No way. Not with traditional shit. I thought it was like in the hundreds. Oh, 24,000. Oh, interesting. Okay. Ethereum is 20 transactions per second. So they do 24,000. So that's kind of right up there with Avax. Or I should say Avax is right up there with these guys. Oh, this one says Visa processes 1,700 transactions per second, claiming to be able to support 24,000. So it looks like they just gave themselves headroom. I don't think Visa is a blockchain though. I know that I know they were doing some work with blockchain, but how can you inflate numbers if they're on the blockchain? I'm confused. Well, the numbers themselves, Ahmed, aren't on the blockchain. This is just performance. So it's kind of like saying my car can do, you know, 400 miles per tank, but then once you start driving, you never get 400 miles per tank. It's kind of like that. Been a lot of attempts from some on Twitter to investigate. Justin has some deep dives. Okay. So, but I mean, Visa, like I said, Visa kind of runs the world on potentially 24,000 transactions per second. So if they can get up there, I know Ethereum was trying to get up to pretty big numbers. I think that Vitalik said that they had a goal to get to some large number. I forget what it is off the top of my head. Vitalik said that by the end of its roadmap, they're not going to be able to get 100,000. Yeah, that's what I was thinking. I just didn't want to say it. But okay, I guess that was it. 100,000. He's trying to get to 100,000 transactions per second. I do remember that. So if they get to 100,000 transactions per second, I mean, I like Avax, but it's kind of one of those. I don't even know what the hell you're talking about here. Anyway, it's kind of one of those things where maybe Avax will take its place, but Ethereum is still the big boy. Ethereum is still the blockchain. It's the Microsoft of blockchain. I'm just going to keep saying that because I think it's correct. It's going to be around. No one's going to really like it. Like no one likes Microsoft unless you're an Xbox fan. That's a different conversation though. But like if you're a Windows user, you don't like Microsoft. You just use Microsoft because you kind of have to. I kind of hate Microsoft. I think it's a big piece of garbage. And I was trying to set up a new laptop, and all it wanted me to do was sign into Microsoft. I'm like, I don't care about signing into Microsoft. I just want to freaking use the computer, so shut up. And it wouldn't. And it is what it is. I think Ethereum is going to be like that. So it'll be around forever. And its market cap supports that. I mean, when you go to CoinMarketCap, you're talking about a $144 billion asset. And the next viable network maybe would be BNB, but they don't really do that much at 37. And then I'm going to exclude XRP, but past that would be maybe Cardano at 9 billion, but that's still a lot of hype. I think that's going to go down a bunch. Polkadot, stuff like that. Those are like the true layer ones. So Avax at number 19 at 3 billion. The biggest isn't always the best. Yeah, absolutely. Yep. But what happens is once you have a large community and people start using you, kind of like, well, I know, .NET is good, C is good, C++ is good, stuff like that, performance-wise. Anyway, I'm not going to go into the debate. I'm just trying to think of parallels. But you get my point. You understand. Yeah, so that's Ethereum. I mean, I think it's going to, rule the roost for a long period of time. But I do like Avax. I think it's going to, Avax could end up being the Ubuntu where more people use it, but no one can make money on it. I don't know. Could be something like that. Major problem with the industry is that it's moving too quickly for regulation to keep up, and that's why we're still bearish. I don't necessarily agree with that. My opinion on the situation, the problem with crypto is there is no single definitive use case. It's a good technology. The reason it's around and big is because of this trading thing, because there's a money component to it. And if there wasn't the money component to it, it would be another esoteric technology. It would be exactly that. It would just be another. There's nothing really truly special about what the blockchain brings to the world. At least not that we can use it for right now, that we don't already have really good solutions for. Because a blockchain is essentially an immutable database, which we have. We have immutable databases. Well, they can be muted, but you get my point. We have databases that can be backed up, that can be, because all a blockchain is a backed up database. It's backed up every single time you make a change, and we call that change a block. So it's just continually backed up, and all those changes are stored. Well, you already have that. I can go to my website database and have backups of that done every day too. Can't have it done every 10 seconds, but if I wanted to, I'm sure I could write a program to do that. But yeah, there's no when the internet came out, it was a whole new industry, and then things on top of the internet came out that made them better, and this has come out, and it's a good thing, but it doesn't have a definitive use case. Like DeFi is probably best suited to blockchain, but obviously it's still immature. We just saw Luna collapse. We just saw a bunch of stuff collapse. I think blockchain is a cross-border payment system, which is as it was originally intended, is probably its takeover scenario. That's probably the legitimate takeover scenario, because it does cross borders where if you're dealing with a traditional financial system, you have to go through those checks and balances. But those people in power obviously want those checks and balances in place for a reason. Some good, some not. And so you talk about regulation. Regulation is supposed to be good reasons to have it, not cross the border. But at the same time, it's kind of anti-crypto regulations. But, for people to avoid an FTX, you do have to have regulated cryptocurrency exchanges. Period. You have to have crypto. You have to have regulated exchanges. But the problem is countries like the U.S. don't want to let us have any fun, and so people circumvent those things. So it is what it is. Bitcoin white paper simply calls it a peer-to-peer payment system. Yeah, absolutely. I mean, when the white paper was written, I don't think he considered it necessarily to be traded in the fashion that we do it today. I actually have never read the white paper, for whatever that's worth. I've never read it, so I don't fully know what's in there. I think it's just a technological thing, but about the technology of Bitcoin. But I don't think he thought about, or they, whoever it is, I don't think they thought about what we have today, 20 years later or something like that. But I think it's two cases, a cross-border payment system, and also being an immutable ledger. Those are the best things, and it does lead itself to DeFi. But we're still super early in DeFi. Obviously, there's bugs. Obviously, there is trust issues. I don't know how that's going to be resolved. Usually, we resolve trust issues with legislation. We go to the government. They write a bill. Well, we don't go to the government. They come to us. They write a bill, and then everyone makes a little bit of money and goes about their business. That's usually what happens. But the problem is that crypto is worldwide. It's the first worldwide thing, in my opinion. It's like the first real worldwide system that is not controlled by a government. It's like Google is a U.S. company, even though it's used worldwide, right? It's regulated in the United States. Pick a company. Sony is a worldwide company, but it's regulated in Japan because it's a Japanese company. So you have all these companies globally that have a country to hold it to account, unless you're Gazprom. But you have a country to hold you to account, where crypto does not have that. So how do you facilitate that? How do you stop the bad actors from being bad actors? That's what we're grappling with. And Brian mentioned governance on Avax. Yeah, but governance could do it, but who's to stop the bad actor from putting in bad governance? So it is at least for now, a never-ending quest to find regulation without it being a specific country, and also finding something to actually do with it. So that's the thing. So let me read some of these comments. If you centralize cryptocurrencies, it kind of defeats the purpose. Well, decentralization, it depends. centralizing in terms of governance is, I think, okay, but decentralizing the actual network itself is good, if that makes sense. Even decentralized governance could be good as long as there's some type of governance. Avax has good governance and scalability. The inflation is still an issue, even with the burn mechanism. Would like to see them for sharding on the C chain, fragmented over subnet SBUT subnets. But is my did I cut you off there? No, I can see it. Still a promising chain for the big ones. Yeah, I like I said, I do like their multi-chain capability there. It's incredibly simple. That's what makes it so great. Bitcoin white paper. Yeah, absolutely. Absolutely. It's just not performant, which is why they came out with all this other stuff. And humanity will always build upon the imagination of other humans. It's our nature. The anonymity and legend of Satoshi adds to the allure of the cryptocurrency. There's no individual corporation that controls Bitcoin. It was released as intended. Absolutely. Problem is the people writing legislation usually have little to no understanding of the tech. Yeah, that's absolutely true. I don't think they need to understand the tech necessarily. I think they need to understand its implications. So if you run for Loopy, if you go ahead and you run for representation in your local government, I don't think you have to know how the water filtration system works in order to legislate that they take chromium out of the water. You know what I'm saying? So I think as long as they can legislate to a minimum level that gives people accountability and safety in their deposits, they can let crypto go. I mean, and I think they should. It's such a new technology, and this whole global thing is really brand new, and nobody wants to give up control. You know, nobody wants to give up control. I mean, I don't know. It's just, I don't know. It's either this thing's never going to go anywhere, or we're still way too early to really fully get it. And we don't have that use case that's just blowing it out of the park. You know what I mean? And if it is just a peer-to-peer payment system, why does it have any value? That's the other part of it. You know what I mean? If we're going to go back to brass tacks, if we're going to go back to the baseline, if we're going to go back to Bitcoin, Bitcoin was a peer-to-peer payment system. You know, obviously you need a way to take it from Bitcoin to dollars or whatever your currency, so you can actually, you know, make use of that transfer. So you know it got a marketplace, but it doesn't. If it's just a peer-to-peer payment system, why does it have any intrinsic value? If it's just a peer-to-peer payment system, then you just transfer over Satoshis and be done with it. Just transfer it out into your native currency. So I think it suffers. I think it suffers from that. I think it suffers from this. To be honest with you, it suffers a little bit from trading as being a cross-border payment system. It isn't just some token. It's now its own asset. It's kind of outgrown its shell, if you will. And then you have all these Frankenstein cryptos, like, you know, all these other ones. But anyway, I mean, I do like crypto. I think a digital store of value makes sense for Bitcoin if you're gonna value it in this market type of an economy. I got no issue with it from that perspective. But if you're viewing crypto as, you know, why crypto hasn't taken off just as use cases, I think it's because this has so much damn value now. Even at $16,000 per Bitcoin is still pretty damn valuable. So, you know, it's being used as a speculative mechanism more than what it's over. The speculation is overshadowing its use case. Is probably the best way to put it. And that's all we're doing here today with this show is speculating. You know, speculation is overshadowing its traditional use case. I mean, what it could have been if Satoshi, you know, maybe could have gone a little deeper and could have pegged it. Maybe this, you know, Bitcoin should have been tether pegged to $1. He should have had, you know, he should have said, you know, 1 Bitcoin per $1, and it's just transfer. Like that would have, I think Bitcoin probably would be much more used a lot more if it was pegged to the dollar. and maybe 20 million, maybe it should have been 21 million, maybe it should have been 100 million, maybe it should have been a billion. But if you made it a tether like system, it would be used more. You wouldn't be able to make money off of it. Western Union would make the money off of it, transferring money, but it would be used more, almost like XRP's model. XRP, obviously we still trade it and stuff like that, but it is used. This is used kind of as a cross-border payment system. So Bitcoin as the open source native currency, right? Bitcoin is your open source native global currency where peer-to-peer transfer happens and no one in between. Someone mentioned trustless earlier. Loopy mentioned trustless, no middleman, right? And then XRP would be your mainstream bank. And so you got Bitcoin and then XRP. If you're strictly talking cryptos and use case and cross-border payments, that's what you got. You got open source Bitcoin and closed source XRP. Boom, done. That's all you need. You don't need all this other crap. And then you got Ethereum coming along. I mean, which is good. I think Ethereum's good. Then everything is just a clone of one of those two, and that's all you have with crypto. It's really interesting. And so, but speculation, I think, murdered the use case overall of crypto. Be better if it was pegged to the gold standard, in your opinion. Well, you have to remember, Ahmed, the gold standard relies on trust as well. It relies on gold being somewhere. The U.S. had its gold. We still have Fort Knox and all that stuff in the central bank in New York. But it would, I don't think it as a digital asset, I don't think it should be pegged to anything. I think it should, it's cross-border payment thing, blah, blah, blah. But in terms of universal global currency, you can't peg it because trust comes back into the factor. We already trust fiat currencies globally. We trust them. We live with them daily. So I don't think it has to be pegged because, in reality, nothing is pegged. Pegging something to gold is stupid. Did I just say that? It's pretty dumb. Because, as you gain population, are you going to mine gold in the same ratio to the population? Otherwise, gold's going to get more scarce, and more scarce, and that's going to have its own effect on everything. So, I don't know. I think I personally think that the whole 2% Fed inflation thing is fine. It allows for some inflation, which gives us some upward price pressure, so everyone can succeed. It's just when we, obviously, and Biden printed all that damn money, screwed all that crap up, which is screwing us today. But anyway, the whole general point is that I do think a crypto should be not pegged to anything. I think it should be pegged to its technology. If we have to trust something, we have to trust rules. And that's all code is. Code is nothing but rules. So you have to have the rules, you have to trust the rules, you have to trust 21 million BTC. And that's it. Why 21? I don't freaking know. But could have been 100 million, could have been a billion, could have been whatever it is. But you have to trust the technology. And going forward with as much tech as we are, as we're getting involved in our lives, you have to trust the technology. His vision wasn't to measure its value in dollars, but Satoshis. Many Bitcoin maxis are planning to hold forever and never convert to fiat. Yeah, so the Bitcoin maxis that hold it forever, what the fuck's the point? I don't get that, because you will sell it one day. Why would you buy something to never? Are you just going to give it to your kids? And then how does that help? How does it help Bitcoin to never use it? The whole point about Bitcoin is, like you said earlier, it's a peer-to-peer payment system. It's just a way to get money from A to B. It's not supposed to be a Beanie Baby. It was never meant to be that. It was meant to be A to B, and that was it. So now we put money into the mix. Now we make these digital tokens worth something, and now Bitcoin maximalists are going to hold it forever. No, you're not. You're just as greedy as everybody else. You just believe it's going to be around 20, 30 years and don't care to learn and play the short swings. It's a simple token trading. There's no incentive to buy it unless you're a believer. Beans and stocks, a better inflation hedge. 40 to 50% GBTC premium is an issue too. Yeah, well, they're now negative 40% GBTC. Yeah, that's a separate issue. We talked about that last week, but Anyway, we're way off the mark here in terms of the what I do during the show, but no, crypto's got its use case. Satoshi's vision is good. XRP kind of fulfills Satoshi's vision, but just for banks though, not for people. Bitcoin does do a good job of peer-to-peer. XRP does a good job business to business, bank to bank, and I don't know. Tether was supposed to do something like peer-to-peer, but I don't think they ever fully actualized that. The rest of this stuff is just trading fodder, just cannon fodder for us traders for the most part. But then you got stuff like Avax, which started this conversation, which is an interesting technology, an interesting use case, and they have a good. I think they have the good 3-tiered system. I like that one. And then you got like Uniswap, which is DEX, so it's got interesting technology. Avax got some interesting stuff, but all based on Ethereum, and then you have your Bitcoin clone. So most of it's just rinse and repeat. Let's move on. Next up is Uniswap. So Uniswap holding the bottom of its range for now. Not a lot of volume yesterday, although we did get over average volume. We shall see if we're going to hold this low or not. It's been in a range for a while. It could try to roll over. This does look a little bit. This looks a little bit like a Wyckoff distribution pattern, but then you have this spike, which is not Wyckoff distribution. It's a little bit like Wyckoff distribution. All right, next up is Atom. All right, so Atom lower as well. Atom made a new low. New low yesterday. Rally back up on lower volume. The selling's fairly consistent, whereas the buying pressure is consistent as well. Just there's not as much buying as selling pressure. So Atom looks like it's in a bear flag also. You see we had a potential for inverted head and shoulders, although it wasn't really that good. Chainlink. And Chainlink over here down in recent lows, which has acted as support all the way back since May. This has been supported for quite a while. Broke the trend line here, came up to the middle, pretty much eroded away after that. Not a lot of volume to the downside. I will say that that's one thing that's probably fairly universal, is we don't have a lot of downside pressure. So if we hold the lows, I think that would be good, but still not very actionable down here. Unless you do want to try the double, triple bottom scenario. In this case, a quadruple, quintuple bottom, if it gets down here towards the 550 level. And then last of the top 20 is Litecoin. So Litecoin broke the trend line. We gave it a chance at 79.81. Couldn't do it. Rolled over with everything else. This having some higher selling pressure, really, I don't think is that bad considering the amount of buying pressure on the way up. It looks like the buying pressure came in pretty strong here, but then has eroded away since. Litecoin's interesting. It's unlike any other coin in the market right now. So decent trading, but really not good trading, and I still think needs a lot more time. So wrapping up the top 20. It really just the leg lower on Friday, the Fed stuff this week really took the sales out of the markets. The CPI numbers out of the United States were not good. Consumer spending slowed. So, leading points to maybe recession in the near future, which led the stocks lower, which, took a risk appetite away from traders and investors. And so they start selling risk assets like cryptocurrencies, and that's what you're left with. The question is, will there be more additional selling, or have they already sold most of what they want to sell? Because we have been in a bear market for a substantial period of time. I don't think, crypto came along in let's say 2010, is like 2009, 2010. The general economy has been in a perpetual bull market since then. Since the 2008 financial crisis, general economies, at least in the U.S., have been in perpetual bull markets. We've had our moments in 2018, 2020, but those were remediated by the Federal Reserve, and that is not the case this time around. So this is a different type of trading environment. So even though we've been down for a substantial period of time, don't go putting on your, hey, we've been down for a year, I'm going to buy now caps quite yet, because I don't know. I don't think the story's fully played itself out. And if we've come down off of the inflation high, but coming off the inflation high, if we go into recession, then you're going to be putting bad on bad. coming off the inflation high means you're rolling over, losing momentum. Go into recession means you lose more momentum, and then we'll see what that leads to. I don't know what that leads to. That we haven't seen this since the 1970s, but I do know that out of the 1970s came the 80s and the 90s, which were extremely bullish. So out of all of this will come new bull markets, just not today. I only had one pair to talk about in terms of USD and BTC pairs. And USD pairs, it was Kava, which we discussed yesterday, because Kava did have a symmetrical triangle breakdown, which did break down and is still breaking down. Kava, very good form chart patterns. I have to say, this whole market has very, very garbage patterns just all around. Like let's just go down the USD. So 1 inch has been cascading down, but there's no pattern there. Aave, there's no pattern here. You have maybe an H pattern on the right hand side. Algo, just a cascade lower. The only thing, if you want to short algo, you had to do it off of here, but pretty choppy. You can see the choppiness right there, maybe stopping you out of that trade. But it's been very difficult to try to find really, really good things to short. So I've highlighted the best that I could based on what's been happening. ENJ, look at that. I mean, those really not a lot to do. EOS maybe taking out one trend line here, but other than that, it's just been just trend line breaks. There hasn't been any major patterns, and it's hard to advocate for major trend line breaks. Here's Filecoin. Filecoin is probably one that I missed. There's a horizontal right there that got destroyed. So, yeah, just you got to find horizontals with lows like these if they're really tight in the end. Filecoin's an excellent example, and so is Kava. Getting just pretty tight here. Failed to go higher, gets pretty tight, then just dumps. But you have to be waiting for these things. You have to be waiting for them. So you get the dumps, and then they just keep dumping. Yeah, it feels like we've just been in 2018, 2019 through 2020. Seems like it's been going on for longer than a year, but it is what it is. All right, let's take a look at stocks, which have had just garbage days. The stock market I do not like the look of the stock market a single bit. Not happy at all. Let's take a look. NASDAQ rejecting highs. Volume, now this is the futures market, so volume isn't super important on futures in terms of major market action, because this is not indicative of the actual volume on the NASDAQ. This is the futures volume, but rejection at highs, we talked about that, rolling over, undercutting recent lows. S&P 500, very similar action. Dow Jones Industrial Average, very similar action, although this is still above its trend line. I guess best case scenario is that next week we start popping back up, and this end of Thursday, Friday to the week was just a crazy shakeout. Russell 2000 rolling over there. Transports undercutting. Apple. See, here's where the problem begins for me, is leading stocks like Apple. They're selling Apple like that. I wonder if this is a triple witching Friday. It is a triple witching Friday. Okay, so that explains the super high volume. This is a triple witching Friday. Means options and futures were expiring all at the same time, which leads to the very large volume on Apple. But down at the low part of the range here, you can see here the other day right there. Look at that's a very similar level. Obviously the volume isn't the same. Popped up to a lower high, lower high, lower high, rollover. If this starts undertaken out of this box here, that's very bad for the markets. Microsoft rolled over from its test of its trend line. Tesla undertook lows. Tesla took out lows. And it's pretty darn low right now, down at 150, up from 400. So the good thing is here, if you look at this chart, bigger picture, let's just remove the chart for a second. The volume, if you're zoomed in, it looks substantial, right? But if you zoom out, when they're buying over here, it's not nearly as substantial, is it? So what we have is that at some point Tesla will come back. You just don't know at what level. Elon's not doing himself any favors here with the whole fucking Twitter thing. I don't know what got up his ass with Twitter, but maybe he's just getting too old and been working too hard for too long. But losing sight a little bit here. We've been eyeballing this level. If we do break this level, which we did, we're about 2/3 of the way down. This is the 135 level, which would fill this gap right there. I'm not a huge gap fill person, but this also sits kind of at the end of a symmetrical triangle. And I am a symmetrical triangle person. So I'll throw the gap in the mix there. So you're going to have a range, which we're kind of getting to from there down to the 133. If we go a lot further than that, look for more elevated volume. That would mean widespread institutional distribution of Tesla, which I don't think would be good. And maybe just an overreaction. But if this whole overall stock market gets weaker, I mean, look at this. Tesla down 4.7%. Apple's only down 1.4%. Microsoft down 1.7%. They're really beating up Tesla right now. And I don't know if it's warranted or not. I'm not sure what institutions are doing selling Tesla off this exhaustively. If Tesla truly is a market leader, this does not bode well for the stock market. If Tesla is a true market leader, it broke down first. And similar to what we just talked about with Cardano, it's probably going to continue breaking down. So not a very good sign here for Tesla in lieu of being a market leader. And look at my trend line. Look at how aggressive that is. We talked about aggressive slopes earlier with some of those crypto trend lines. Look at how aggressive this thing is, and it held. I mean, that is not good. You come here, you pop up, you hit it, reject it, reject it. So maybe pop up, reject it again. I don't know, but it's not very good. A break of this trend line would be nice and healthy. It at least indicates that the extreme selling is wearing itself off. Another thing to look at too is look at the volume trend here. The volume trend is clearly higher right there. And again, I'm not viewing that as bullish. I'm not viewing that as, hey, someone bought a lot of Tesla right there. Obviously, shares traded hands, but the fact they're willing to sell that much Tesla is not a good thing. How powerful is Tesla with bringing down others? Are you talking about my comment about it being a market leader? Well, let me take a drink, think about it, and explain market leadership real quick. When Musk sold off billions months ago, I knew we were in for some fun. Okay, so this has less to do with Tesla than it has to do with market leadership. So I'm going to timestamp this market leadership. In every stock market rally and even declines, there are leaders. There are certain stocks that will lead you up and will lead you down. So if Tesla is a true market leader, which it tends to be, it's not good for the overall market because it sold off first. So in other words, the powers that be have so much money piled into Tesla, they're thinking about distributing, so they sell Tesla first because it's an outsized portion of their portfolio, and they want to take that particular risk off the table. So while maybe they own Microsoft, Apple, and Tesla, they're going to sell Tesla harder because they have a larger portion of their account in Tesla. And leadership, this goes back, decades and decades and probably since the beginning of the stock market. It's kind of like human psychology at work here. If you've got something disproportionately in your account, you're going to liquidate that first. And so if Tesla's liquidating, then as you see here, they really broke down. Well, let me zoom in. They started breaking down really here. They hit their first November 9th. The market did not break down November 9th. You know what I'm saying? So either Tesla's not a leader anymore, or if it's a true leader, then we're going to start breaking down. So these things break down first. They also break up first. They break down first and they break up first. So, if you look at Tesla's runs, I'm just going to, I guess, pick a random one here. Let's pick this one here. So let's look at June 9th, 2020. Obviously the market may not be rallying on June 9th, 2020, but just as an exercise. So there's June 9th. So, Tesla kind of broke out, chopped around, then rallied up. S&P, NASDAQ was already kind of in new highs, so maybe a bad example on that one. But, yeah, let's look at maybe the rollover or something like that. So the high here was November 22nd, 2021. The high here was November 4th, 2021. So this sold off first. There's the high, sold off first, then the market sold off after. So Tesla is leading the market. It let it down here. It started leading it down here. It is leading the market. So this does not bode well overall for the stock market. Um, yeah, I did want to do some more research into, um, prior bear markets, like even 2008, 2018, stuff like that, and see, what was leading and if it came back just as good. The stock's performance was irrational to begin with, a big bubble waiting to be popped. Um, well, I mean, I guess that's one way to look at it, Brian. But if you have those types of biases, then you're going to miss out. I think you just take the chart as is what it shows you. It doesn't matter why it's running up. It really doesn't matter. You can call it a bubble, you can say irrational, you can say whatever. It doesn't matter. The chart is the chart, right? The market is the market. It doesn't matter if it was irrational or not. It's a real tangible thing. So it is what it is. But I'm just talking in terms of leadership of the market. Tesla does tend to move first. It moved, it topped out first, topped out before the NASDAQ did, and now it's selling off before the NASDAQ is. So if the NASDAQ sells off for the next month or two, just remember, oh crap, let's look at Tesla. You know what I mean? Let's see what Tesla's doing, because Tesla's leading the market. So what that means is this, is that when the market tries to bounce back, Tesla will probably bounce first. So if you're looking to get back into the market, you can use Tesla as a early indicator of what the general market's going to do, because the institutions, the powers that be, will buy Tesla first if they still have leadership, if they still think the growth is there. Now, if they don't think the growth is there, they may not run Tesla next cycle. It's not guaranteed Tesla's going to run during the next cycle. That's the other part of this, to be honest with you. The chart doesn't lie chart doesn't lie currently. So, but yeah, Tesla's not guaranteed to lead during the next cycle. Now, Apple has kind of bucked the trend. Apple has been a market leader for many, many cycles in a row, and that is very rare. It's very, very rare that the same company will lead through like 20 years worth of cycles, and it's not quite 20 years, probably more like since 2010, 2009. So it's led for like 11, 12, 13 years. Very, very rare that a stock will do that. Usually a stock will end its run and then be promptly shown the basement, is usually how it works, vis-a-vis like Exxon, going back long time. It never really quite does what it used to do. I don't know if Exxon's the right. Boeing may be a better example. Let's go to a monthly calendar to look at this, because it does kind of prove a point. And Boeing's a bad example too. Boeing's been doing pretty good. It doesn't lead the market though. Boeing isn't a market leader. It's kind of a market follower. But there are a good one is Microsoft. Still have this 12 years of stagnant activity before it finally got going again. So it was making money this whole time. It was making money the whole time. It was just stagnant for 12 years. And maybe Tesla will do something similar. Tesla may go stagnant for a period of time before it gets going again. I think Tesla's of a sufficient scale where it's not going to go away. Tesla's not going to be bankrupt. I mean, Elon would truly have to fuck that up bad for Tesla to go bankrupt. So I don't think that's the case. I mean, Amazon kind of, went stagnant for a while. Huge market leader, went stagnant for a while, and then, brought its market leadership back. Apple's pretty much, been leading since 08. Even prior to that, it was leading pretty good. But there's a lot of stocks. I'm trying to think of a good one off the top of my head. So I think there's like generational leaders, and Apple and Amazon is a generational leader. I don't know. I personally would put Tesla in with generational leadership, with what it's been able to do and how far ahead it is of automakers. As long as it can maintain some type of supremacy, it definitely has the brand. So it has that going for it. It's not really a new market. That's a negative for it, but I'm trying to think of another one that, like, there's stocks that run. Starbucks, I don't think is a good example. They're a generational leader. Crocs. Crocs is an example of one that had some crazy bull runs. It's a leader in its industry, but just really isn't giving you super outperformance. There's one I'm trying to think of. Dries could be one. They may not be a stock anymore. So anyway, there's stocks that lead and do really well that don't come back. So, but yeah, I don't know. Maybe Tesla will fall into that category. I really hope not, but it's a possibility. But right now, it's leading the market. So it may not come back. There are some generational leaders, but it may not come back, and I really hate to say that, but it's a possibility. It's not leading the market to stability right now. And the other thing is that the market right now is in a garbage state as well. So Tesla leading lower, is leading the market still, but the market does suck right now. Microsoft had market dominance during that time, though, too. Can't really say that of Tesla going forward, though. That may be debatable. Yeah, that's what I was saying. Like, if Tesla can maintain maintain that leadership in electric vehicles, because keep in mind, electric vehicles are 100% the future. There is no doubt about that right now. Anyone that says electric vehicles are going to die off is living in a fantasy land. Every auto manufacturer and even legislation is doing away with, in some countries, with fossil fuel vehicles. Some to the point of ridiculousness, like California 2030 law or some shit like that. But maybe that was a country I'm thinking of. But I mean, electric vehicles are here to stay. I mean, point blank. If Tesla can do everything that they've said they could do, but I don't know. They've been unable to deliver on full self-driving. I don't know why the Cybertruck's taken fucking 4 years to do. That seems stupid to me. There's a lot of missteps. If there's a misstep year, I think it was probably, we're in the middle of it. Probably 6 months in. I think 6 months ago, they really should have jumped on Cybertruck. Should have split teams, hired more people, jumped on Cybertruck, had another team doing the $25,000 car. You know what I mean? Because you're right, there is competition coming up. I think they need to be that aggressive, and they're not. I think they're resting on their laurels right now, which is annoying. What's up, Frazier? Does it always feel like the world is ending in bear markets, or is this one unique? Seems like there are so many factors coming together. Yes, it does always feel like the world is ending. This is nothing new. It does always feel like the world is ending. I was thinking that the other day. I'm like, man, I've felt this before, and this feels just like that other. This feels just like that, like 2008. This kind of feels like that. Like anything good doesn't do anything, And then all these other bad factors are coming in. Just nothing is giving us support. But the main reason for that, though, guys, is the Federal Reserve. We're not getting support. The Federal Reserve is usually the one that supports us, and they're not. And for a reason, because they're trying to fight the whole inflation thing going on right now. Whenever that changes, the market will turn around. So you're just hoping, you either have cash when that happens and enough to buy assets at ridiculously deep prices. Because like I said earlier, we're piling on garbage on garbage on garbage. The first batch of COVID money that stepped into the market in 2020 was fine. You know what I mean? Like, let's go to the NASDAQ here. The first batch of the money, like, this was fine. We would have eaten this money. This kind of the same way we did 2008. There wasn't massive inflation in 2008. I know, I was around. There wasn't massive inflation. I mean, there were some residual issues, but it wasn't anything that we couldn't handle. And then, so this initial burst of money here that came in was fine, because I mean, the economic slowdown was real, and everybody had to stay home and all that stuff. And I get it, and I mean, Trump did all that stuff. So you guys know I'm not a big Trump fan, but Trump did all that. That was fine. He printed some money. That was fine. You have to do what you have to do during certain times, and he had to do it. I don't think he wanted to do it, but he had to do it, and he did it. And so kudos for him for doing that. And that kind of, saved us from what really would have been like a 1929 scenario. That would have been 1929. Hey, world, let's just stop doing stuff. Okay. And then economy grinds to a halt and the world falls apart. That's 1929 in a nutshell. That's not why 1929 happened, but the effects would have been the same. It would have been nobody would be there to support the market, because what investor is going to invest in something that isn't even a business anymore? So the Fed did have to step in, and they did. But the second round that Biden didn't need to happen. Okay, so that caused so the economy was fairly normal when Biden stepped in and felt like he had to fulfill some campaign promise and do something, and he didn't have to do that. He did some other things as well. Um, he did some other things as well that I still, it's debatable whether he should have done that. Like that, some of those things are fine. He did something. I don't know if some of you guys aren't in the U.S., but he did one thing where you can get a child tax credit write-off check. So they basically took half of your tax credit write-off, gave it to you as a check over the course of like 3 months or something like that. But that wasn't money printing. That was just early tax refunds. So yeah, do that, whatever. It was weird, but he did it and it was whatever. But then he printed the $4 trillion for like no apparent reason, and just thinking he had to do something, which led us to this. That's exactly what this led us to. Not only did it lead to the declining stock market, it led to the Federal Reserve having to raise interest rates to fight that inflation. So it's a double whammy. And I don't know what happened behind the scenes that made that happen, whether Biden forced it through or what happened, or anyway, but it caused us this. But the Federal Reserve, the fact of the matter is the Federal Reserve is not backing us right now. They're not supporting the economy. They're doing the opposite. They want to deflate the economy, which means they have to raise interest rates. But the whole reason we're able to stave off all those other things was because the Federal Reserve stepped in. So, we can talk about charts and we can talk about all that stuff, and we will, and we do, because it's what we do. But the backdrop to all this, going back to our dinghy and ocean analogy, the ocean is the Federal Reserve. They got all the frickin' money. We're just dinghies. So you got big ocean liners, which are the stocks and the institutions, and you got you and I in our little dinghy boats, and really poor people are in life rafts or life vests floating around in the ocean, just at the mercy of this old garbage freaking, thing that we're going through right now. Money supply just about doubled under Trump, but it's Biden's fault for inflation. I wish our politicians were honest about the problem. Both are to blame. Yeah, no, Trump didn't do us any favors in terms of the money supply and the debt, because his tax cuts were paid for with debt. So he didn't. He said, yay, tax cuts, but then he created more debt. So you're robbing Peter to pay Paul with that one? And yeah, I agree with you. Obviously, yeah, it's Biden's fault for the inflation, 100%, 100%. But it was Trump's tax cuts, I think, with the whole money supply thing. I don't know. I'm not going to look into it, but I'll trust whatever you say there, Brian. I don't want to. Yeah, debt versus money supply versus taxes, all gets weird. If there only existed a decentralized currency that could be printed at will. Yeah, it's called the dollar, actually. It's called the dollar, minus the decentralization part. But anyway, so it is what it is, and we just guys, we just have to go through these times. So the strategy during these times is not often talked about. It's legitimately not. So it says there's 12 of you left. There's 11 of you left. You're going to get the secret. This is the legitimate secret and how to handle this. You don't invest. You hold cash. You stack money as much as you possibly can while we're in garbage markets. If you're fortunate enough to have a job and fortunate enough to be able to save money, you stack cash, stack it, stack it, stack it. And when the market's good again, you put it to work in the best way that you know how. If you want to be less risky with it, you can put it in an index fund. You could buy Bitcoin directly instead of buying an altcoin. You know what I mean? Something like that. But you wait till we're done, but you have to wait. A lot of people will jump in and, I was going to talk about this. Yeah, let me show this. 50 Satoshi. What is this? That's funny. Couldn't? What soundbite are you talking about, Loopy? I'm looking for a 50 thing. Yeah, you stack it, and then once we're and the Federal Reserve and the stock market will give you the clue. The stock market will respond to what the Federal Reserve does, and that's your clue. I mean, in a nutshell. Oh, I'm in the wrong room. Hold on a second. Christmas tree, that's funny. Still looking for it. 50 Satoshi has been pretty good lately. Posting some good things. So yeah, this I'll leave you with this, and then we'll wrap it up. He thinks we're going full 1929. I don't necessarily subscribe to that. I don't subscribe to anything, to be quite honest with you. I'm just waiting to see what the market does. So he's got a viewpoint that we keep going, and this is a famous quote from 1929 in its pretty much entirety. Almost everyone believed that the speculation could now be resumed in earnest. A common feature of all these early troubles was that happened. A common feature of all of these earlier troubles was that having happened, they were over. So in other words, the worst was behind us. The singular feature of the crash of 1929 was that the worst continued to worsen. What looked one day like the end proved on the next day to have only been the beginning. Nothing could have been more ingeniously designed to maximize the suffering and also to ensure that as few as possible escaped the common misfortune. The man with the smart money who was safely outside of the market when the first crash came naturally went back in to pick up bargains. Then the bargains suffered a ruinous fall. So that's a very poignant quote that most of the time you don't need to know, but it's good to have in the back of your mind. And there's a possibility that 50 is right, and we are kind of just starting in this thing. I don't know where it could go to. You know what I mean? I mean, one thing that I talk about often is trends and momentum, and I do a lot of work with trend lines. Well, let's do a little bit of work with these trend lines real quick. And if you notice how long some of these are, notice one that we're right up against. We're right up against this one. Let's get rid of this orange one. But I mean, I've done a lot of charting, way too much charting, and this is not a good chart. This is kind of a scary chart. If we can't hold this supportive trend line, then that means this goes all the way back to 2009. Remember I mentioned we've been in the same bull run since 2009. Here you go. Here it is. There's the trend. And we have had to adjust it because initially you had this trend and you adjust a little bit, and then you eventually end up with this, and then you undercut and bounce up, undercut and bounce up. Once you undercut and bounce up, you can adjust the trend line, but at some point it has to go. Every trend line gets broken, and this one may be on the cusp of it. So do we go all the way back down to these levels? Do we go in a bear market till 2027? I don't know about that. That seems a little bit excessive, but you never know you never quite know what it's going to be. So here you had, so this one was what, September 2000. Here was a 2-year bear market right here, coming out of 2000. And I will say, as someone that's been around the stock market a super long period of time, everyone and their mother about every 3 weeks brings up, oh, this is why this market is like the year 2000, or this is why this market is like 1929. Happens all the time. Happens like I said, about every 3 weeks, maybe 3 months, maybe 3 years. But there's been a lot of time between 2000 and today, about 20 years. And that's about the length of a major market cycle. So we could be headed into this next major market cycle, which could be down, because we haven't had one that you remember. All of our memories are of this. Look at how beautiful this is. Looks like you should have just bought and never sold, right? But yeah, the next cycle could be incoming, so 50 could be right. And in between isn't possible? No, that's what I'm saying. I'm saying it is possible. Going in between here, well, it could stop anywhere. It doesn't have to come all the way down here. It could, yeah, you're right. It could stop here. There's no reason it couldn't stop in May of 2025. Maybe we do only go down for 2 years. So let's do, that's a big font size right there. What's 365 times 2? 677. So right here. Yeah, so actually January 2024. So, maybe we follow that trend line for 2 years. I don't know. But that would be about a 2-year bear market. That would be another 2-year bear market right there. If it just followed the trend line. But the bottom won't be at the trend line though. So let's I don't know, let's cut it back down. Let's say we take out all of this bullishness and we get all the way back down to here. Like, I don't know what that percentage is, but it's not fun. Or it is fun if you're short. 70%. 70% is a lot. So let's see what we did in 2000. So 50% in 2008. And look at, 2000 obviously got too overinflated. 83% in 2008. I don't know if we're going to do these numbers. All I have to say is that I really don't like the charts that I'm seeing right now out of Apple, Microsoft, especially Tesla. I mean, you could see just ridiculously cheap dollar numbers on all of these stocks. If it does get that bad, you could see another 50% out of Tesla get under $100 in Tesla, or maybe it finds support at 100. I don't know, but looking at indexes, breaking this trend line on the Nasdaq is not a good thing. And then you've got, I'm just going to take the wick out of it for right now. You got the S&P playing with its trend line. If you notice, it's basically a channel. And if you kind of print this with money supply, which I'm not really going to do, it kind of, that same uptrend goes. But actually, if you do look at the M2 money, actually, I think I can just do M2. No? Oh, yeah, there it is. So there's the M2 money supply. We're flat. So here's all that printing. And then we're flat right now. So if we take this as a trend line, we may have to wait. So here's another theory I've got. I've got a lot of theories. We need to wait till we get to this point again. If we were to do this, I think that like in 20 years there won't be any major adverse effects. I think we would just be normal. Like I think the new normal in terms of prices will remain. I think they will remain, but if we kind of keep this trajectory, which we've remained on since 1997, actually, not too bad. 88. So you didn't print money here in the 90s. It started printing money in 95. The market took off. So actually here we do have a parallel. It's not exact. Because obviously this is a big rounding. But you get my point. I'm just going to put it on the bottom here so it doesn't obfuscate too much, but you get my point. We come up, we reduce the money supply. We don't print as much. And then we're off. Money supply is up. Asset prices go up again. But we did it so much here. If you notice, it's very interesting how we keep reverting to this mean, right? You pop up, you come down. You pop up, you stay up for all the 2000. So this was them printing money during the bear market, 2002, 2003. Then they slowly tapered off the money supply, kind of came to the trend line again, had to print in 08, came to the trend line again. So here's another one. Oh, wait, looks like a blip, doesn't it? Look at that. So there's a nice horizontal. So we never quite got to the trend line, almost like we would start printing, like that again or something. Like we're gonna chop around here for a little bit, and then we'll start printing again right here like this. Like we may not get to the trend line. Maybe we do. Maybe we take the whole thing and we start printing up again like this, but it's not as much, and then we start printing up like that again. And then we're back to normal, whatever that may be. But all this money here has to flow through the economy. It has to be ingested. It's kind of like eating, 3 Thanksgiving dinners at once. Like, how's this going to work? My stomach can't hold all this food. I have to poop it all out. That's gross. Sorry about that. But yeah, you generally get my point. Is it, look at 2008, looks like a blip compared to what we did when we just, stopped the whole global economy and we printed our way out of it. The funny thing is, yeah, you're right. You're right, Brian. This is all under Trump. 2020. Yeah, that's right when it came in. March 2020. Boom, boom, boom. And where'd Biden come in? 2021? He got 2020, right? Wasn't his election 2020? Yeah, 2020. So then Biden came in June 2020. When did Biden get elected? Oh, January 6th, right? 2021. Oh, 2021. Okay. See, that's why it was weird. So January 2021. So right here. So that's where Biden came in. So it looks like Biden and Trump kind of printed the same, but Biden didn't have to. He didn't need to print all of this. Looks like they printed about the same. That'd be interesting to find out if they printed the same amount of money or not. That'd be interesting. And I wonder if you can blame them or if the Fed's to blame. I'm not sure on that. But Biden obviously passed that $4 trillion tax thing. Fucking stupid. Anyway, but yeah, I think we just have to go through this. So if you can come out the other side of this ahead, guys, if you can come out of the other side of this ahead and not lose all your damn money trying to catch a bottom, you could find yourself. I remember Apple was $75 back in 2008, but they've split since then. So what was it? It was $3, and they're now $134. So you could find yourself with some monumental buys. If and when we come back down. I mean, and even Apple's reign will eventually end. We'll see if Apple gets it. But remember I mentioned Tesla, there's not a lot of selling pressure. Look at Apple. All the buying pressure here. Look at very little selling pressure. Even though it's coming down, not a lot of people are selling Apple because they just make the most money in the world. So here you've got Tesla, which is newer and kind of a similar situation, but obviously, it's kind of a different beast. So anyway, yeah, there's a lot of stuff going on. None of it's really necessarily bullish right now. I think standing aside is really the right thing to do. I could try to sound smart and try to throw, a bunch of trades your way, but it's that's for the bees right now. I think the smart money and the bigger picture looking individuals are the ones that will be waiting. And it is what it is. It just is what it is. We just have to go through it. If you want to do shorter term trading, that's fine too, obviously. If you want to try to, short through some of this, that's something you can attempt to do. Just be very realistic about what you're doing and stop losses and things like that. All right, I'm going to wrap it up. It's been a good one. Thanks for the chat, everybody. Good participation. Appreciate it. Good comments all the way around. So wrapping it up today, yeah, we the Federal Reserve took the wind out of our sails during the week, and we did start the rollover. So it looks like in crypto we are basically chopping around right now. The bias is definitely lower. So we had a really good chat today. I have a time called Market Leadership at 101.50. You guys can check that out. And we talked a lot about mainly the stock market, but right now the stock market is kind of leading the cryptocurrency market, I think. And at least they're may not be leading, but at least their risk appetite seems to be about the same, which is very little risk. So it is pertinent. It's also pertinent to crypto. Everything I talk about stocks, you can move it over to crypto. It's pretty much, especially with the technical stuff, because all technicals is accumulation and distribution. And at the end of the day, that's all we look at anyway. So be safe out there, guys. If you're going to trade with stop losses, preserve capital, stack capital for better days. And then when the market's good again, we can jump back in. All right, everyone. Have a great day. Stay safe out there. I'll see you next time.